Here's a video lesson that I share with my students inside the 1% Club, my private mentorship program for serious traders. In this lesson, I break down the exact psychological shift you need to go from an emotional, undisciplined trader to a calm and calculated and even a profitable one. And to make it even simpler, I'll give you the 5 trading rules that you must master if you want to succeed in the long term. So, pay attention, take notes, and apply what you learn. Because this is the same psychology framework that has helped my students scale from struggling traders to becoming 6-figure traders, putting in profits every single month. In this lesson, I'm going to help you develop your mental edge so that you can essentially trade in the zone, be in the zone while you are trading. And you are able to unlock this higher mind that most traders can't comprehend in their entire trading journey. So if you're able to really master the 5 fundamental truths, which I'm about to show you later, that is when you are able to gain a huge advantage over the rest of the traders in this entire world. Alright, but first, let's look at what normal trading looks like, right? What normal behavior actually looks like. So this is the mind of the emotional trader. So first of all, you identify a zone and she's a beauty. I can't wait to go short. This can be 10R at least. All right, cool. So you enter for a sell right here. Okay, so you're inside the trade right here, and then you start seeing price go in your profit, and then over here price start retracing a little bit against you, and now you start hesitating. You start thinking, could I be wrong on this trade idea? Because like, what's taking so long? Shouldn't price already hit my take profit by now? And then price start going against you, start going to the red zone, start going near your stop loss. And then right now you're thinking, oh my god, price is turning against me. I should get out, I should get out. Your amygdala lights up like a Christmas tree and it's signaling to you, telling you that you should get the hell out of this trade. And then the next thing you know, price goes down. And guess what? You got out right here because you were scared to hold on the trade. You thought that it was actually an invalid trade idea, right? And then you just got out. So you thought to yourself, oh, damn, I'm so smart, right? I got out right here and price went up even further. And then next thing you know, price starts going down and then you start thinking, oh my god, wait, what? The trade is actually working. I'm actually going to my take profit. And then guess what? Eventually price goes your take profit, hit your take profit. You could have potentially made 10R, right? And you sit there regretting getting out early, wondering what if, could have, should have, and being a hindsight trader. Now, why didn't I follow my plan? Because of your emotions. You can see you're pretty much riding a roller coaster. Your emotion is going up, down at all times. And if you are still trading like this, like pretty much the majority of traders who lose, you are just going to suffer this endless cycle of fear and greed controlling you, controlling your capital, and you are never going to succeed this way. If your psychology isn't right, you will consistently violate your rules. Okay? No matter how good your trading strategy is, you will not be able to take full advantage of it. You will not be able to maximize the full potential of your trading strategy if your psychology is messed up. Right? So yeah, a little note right here. Backtesting helps you see if your trading system works. Forward testing gives you the confidence to work the system without fear. Now, this is the greatest book ever written on trading psychology, in my opinion at least. It's called Trading in the Zone, and it's written by this guy called Mark Douglas, who is a very good coach, a very good trading psychology coach for hedge funds, financial institutions, the smart money basically, right? He basically coached a ton of traders to become really successful at trading. And this book completely transformed my trading mindset. It was a huge paradigm shift. It completely changed the way that I look at the markets. Right? It allowed me to, like what the book say, master the market with confidence, discipline, and a winning attitude. Now, I want to impart the wisdom that I've learned from the greatest of all time, Mark Douglas, onto you so that you can start seeing the markets for what it actually is, which is an irrational, unpredictable beast, that a force to be reckoned with, rather than what you think it is. ATM, right? As something that you can easily withdraw money every single day. So, I'm going to talk about the 5 fundamental truths that was pretty much inside this book, Trading in the Zone. And these 5 fundamental truths have completely changed the way I trade. And they are extremely powerful. Only if you believe in them with every fiber of your being. What I mean right here is that you cannot just know them. You cannot just have a shallow understanding of them. You need a deep understanding of them, and you must believe them and really live by them. Right? So yeah, you must really believe them in a subconscious level that all these 5 fundamental truths are actually true and they will actually help you out. So the first truth is anything can happen. Anything can happen at any point of time in the market on any given trade. Because there are always unknown forces operating in every market at every moment. It takes only one trader somewhere in the world to mess your entire position up. Right? Imagine right now, today you enter for a buy on Euro USD. Right? It checks all the boxes in your trading plan. You are extremely confident that price is going to go up. So as a result, you don't place a stop loss whatsoever. And then somewhere on the other side of this world, there's this 1 billionaire trader, this hedge fund money management or something, who is managing billions of dollars in trading capital. And on that particular day, where you decide to enter for a buy, that guy who can actually move the markets decide to enter for a sell. And the next thing you know, price dropped down by 100 pips. And since you didn't place a stop loss, you are suffering a massive loss right now. Right, the trade is going against you by 100 pips and you don't know what to do, and the next thing you know, your account balance dropped to $0 and you just blow your account. This is what I mean. Anything can happen at any point of time in the market on any given trade. So no matter how confident you are, there is always a chance that you will lose the trade because you don't control the market. I don't control the market. The big boys do, the smart money do, and you cannot predict what they are going to do. And also, unknown forces operating in every market, what does that mean? That also means that at any point of time, something unexpected can happen, right? A war can break out. A pandemic like the COVID-19 can happen again. And these things are unpredictable and they have such a huge impact on the financial markets. So trading is not really about predicting the future because that cannot be done. If you accept this fact, it is much easier to take losses without destroying your self-esteem. Which means when you lose a trade, you don't think to yourself that you are a bad trader. You don't think that your trading strategy sucks. No. You know that you cannot predict the future. So all you can do is to really just follow your trading strategy, execute the trade that is in accordance with your trading plan, and whatever happens. For each trade that you take, you don't know the outcome. You accept that anything can happen and therefore you have no expectation for that trade or what the market should or should not do. You release all your expectation, you are detached from the outcome of the trade. You are not assuming that price will go in this way or that way. No, you have no expectation. Once you put on that trade, the market can just do whatever you want. And it's outside of your control right now. So how do you make money not knowing what will happen next? You treat trading as a probability game. Which brings us to truth number 2. You don't need to know what's going to happen next in order to make money. Now, like I said, trading is simple. Profitable trading is simple, but it's not easy. Right, profitable trading is all about doing your analysis on the charts. Since you're armed with the knowledge on how the financial market works right now and how price move, go and analyze the charts. Go and mark your supply and demand zones. Go and mark up your order blocks and go and look for your available liquidity. That's you doing your analysis. You preparing. And then, how do you prepare? Right, with a plan. Right, you go through the criteria of your trading plan. You go through every single step, right? You go through your risk management plan, and then after you've done your analysis, you're just waiting for price to get to your point of interest or waiting for your criteria to get checked off. And then it really just comes down to two options if you think about it. It's either you execute the trade if it checks all the boxes in your trading plan, if it fulfills all the criteria that you have in your trading plan, or you just do nothing. If there is no opportunity in the market, you stay out of the market. Like I said, this is really all profitable trading is, right? You don't need like 10,000 different trading indicators, or you don't need to learn a lot of complicated trading concepts. No, it's all about doing analysis, following your plan to a T, and if something lines up your plan, take it. If it doesn't, don't take it. Now, this is where most traders mess up. The duration between the analysis and their entry, or rather the gap between their analysis and their entry. Because what happens is that after they done their analysis, they know that price need to get to a certain point of interest, then they will enter for the trade. But what do you do in the meantime? Right? What do you do in the meantime? You start getting impatient and you start forcing trades when there is no clear opportunity, just so that you can make money today. You know that a high probability trade setup will only present itself when price gets to your desired point of interest. But meanwhile, you want to make money and you can't help it. So as a result, you enter right now. You take some sort of low quality trade setup, you force trades when there is no opportunity, and obviously you are going to lose money. Because you are not only going against your own research, your own analysis, your own preparation, you're also going against your own plan. So yeah, this is really where most traders mess up, when they are waiting. And trading is a probability game in a sense of, like I said, concepts like right and wrong or win and lose, they don't really matter. It's not about being right all the time. It's about making the most amount of money as humanly possible. That's all it is. That's all trading is. The market doesn't care if you're right or if you're wrong. You shouldn't care about whether you're right or wrong either. You should just care about making money. That's your sole purpose as a trader. Trading is like rolling a dice or flipping a coin. Will you get angry or feel stupid when you don't roll a winning number, or when the coin does not land on heads? No, because with a dice or a coin, you accept the fact that you cannot know the outcome. You have no expectation whatsoever. You don't expect the coin to land on heads. You don't expect you to roll a number 7, because you know that it's absolutely random. And you need to apply the same idea to your trades, and this will really save your self-esteem, right? So you can see I put like a little slot machine emoji right here, because it's essentially like playing a slot machine. Do you expect to immediately get a jackpot after you place the quarter in? No. You know that the outcome is random. You know that, okay, you might not win this time round. You might not even win the next time round, or even over the next 10 rounds. You accept the fact that it is completely random. Same thing with trading. Now, I don't want you to think in terms of, oh, what will the market do? What if the market do this? What if the market do that? Right? I want you to think in terms of what if. Okay, not really what if then. If price comes to this point of interest and does XYZ, then I will enter. If price does not, then I will not enter. As simple as that. That's all a mechanical trading plan does. It gives you the rules that you need to follow, and you just follow the rules to a T. And always make sure you think 5 moves ahead like a grandmaster in chess. Right? What I mean is that, like, after you enter for a buy, you don't really want to be overly optimistic and just think about, okay, what could potentially go right. You need to think about what could potentially go wrong. What if the market start going down? What are the different scenarios that can play out from now on? And this is not so that you can suck yourself out of a good trade. No, this is so that you can really, like I said, accept the fact that anything that can happen in the market, and kind of like think about what are the different scenarios that can potentially play out. And then you always want to make sure that you react and adapt to the market and never predict what the market will do. Okay? Never ever impose your thoughts, your bias onto the market. And this is actually easier said than done. Because what happened is that after you enter for a buy position, your mind will only be focused on seeing what is right. Your mind will only be focused on seeing the bullish side of things, right? You will not think in terms of the sellers. No, you will think in terms of the buyers. You will marry your trade idea, because deep down somewhere, you are hoping that your trade idea will work out so that you can avoid pain. And as a result, you're going to find all the reasons in the market to actually rationalize your buy position. So that's what I mean when I say that you need to react and adapt to the market. Because what happens is that after you enter for a buy, the trades start going against you with huge momentum. And deep down, you know that this trade idea is invalid already. It's not going to work out whatsoever. And you have a chance to cut your losses, but you choose not to because you are still too stubborn. You are still believing that you are right. And as a result, you end up suffering a big loss because you fail to react and adapt to the market. You are trading the market based on your idea of what the market should do, not based on what the market is actually doing. And if you zoom out, it's actually bearish. And the third truth is there is a random distribution between wins and losses for any given set of variables that define an edge. Now, let's look at a 30% win rate trading strategy and what that actually looks like. You might think that, 30% win rate trading strategy means out of 10 trades, I'm going to win 3 trades. And perhaps I'm going to win the first 3 trades and then lose the next 7 trades, right? Wrong. This is the reality. The reality is that you might lose this trade, you might win the next trade. That is just 30% win rate. What I mean right here is that you will never ever know the sequence of the trade outcome. Which trades are going to be winners or losers. Whether you're going to start off with a 3 losses, or you're going to start off with 3 wins, you don't actually know. Whether you are going to lose this trade or win this next trade, you don't actually know the sequence. That's what it means to have a specific win rate. And also, if you notice right here, there's only 2 green ticks, which means in reality, you actually win 2 out of 10 trades instead of 3 out of 10 trades. Because that's what you assume 30% win rate is like, right? No, wrong. 30% win rate does not necessarily mean that you will win 3 out of the next 10 trades that you take. Because this 30% win rate, it could take 100 or 500 or even 1,000 trades for the underlying positive expectancy to show through because of the law of large numbers, right? Which means 30% win rate might mean that, okay, you are going to win 30 out of 100 trades. But it's not going to mean that you are going to win 3 out of the next 10 trades. And that means that even with a 30% win rate, you can still lose 8 or 9 trades in a row. And this is what so many traders don't get. They think that just because they have a 30% win rate, they are going to win 3 out of 10 times. No. That's not how it works. Or even if you do understand this fact, you don't fully accept it. Right? So, like I said earlier, it's really not about how many trades you lose or win or how many times you're right or wrong. It's really all about how much money you make when you're right and how much money you lose when you are wrong. And every single trade is not related. Just because you won the last trade does not mean that you win the next trade. Same thing with losses, right? Just because you lost the previous trade does not mean that you will lose the next trade. Every single trade is not related whatsoever, and you need to get this through a thick skull of yours. Because what happens is that a lot of times, when we are winning, when we are on a winning streak, we automatically feel that we are invincible. We automatically feel that this winning streak is just going to sustain and we're just going to win the next trade. So yeah, when you go on the market with that mindset, you automatically assume that you are going to win the next trade. That is a recipe for disaster. Same thing with losses, right? When you are going through a losing streak and you can't seem to find the light at the end of the tunnel, you start losing every ounce of faith and hope in your trading strategy. Guess what? You look at the next trade idea, you are too scared to actually enter for the next trade because you know that you will lose since you lost the past 5 trades. And that's not how it works. Because if you go in that mindset, you are automatically assuming that every single trade is actually related somehow. But that is not true. It's really just random. If every loss puts you much closer to a win, you will be looking forward to the next trading opportunity that lines up with your trading plan, and you will enter the trade without any hesitation, reservation, or fear. Because like I said, there is a completely random distribution between wins and losses. However, if you still believe that trading is about being right all the time, then after a loss, you will feel scared to enter for the trade even though that trade lines up with your trading plan just to see the trade go in your way. Because guess what? You didn't trust your plan. You psyched yourself out of a good trade. You let your emotions take control over you, have power over you. When you enter a trade, you must fully accept and embrace the risk of that trade losing. You are paying the market to find out what will happen next. And that small risk you take on is the price you pay for your potential reward. Like I said, a lot of you guys know this, right? In fact, you know that, okay, there is a risk and there is a reward. But you don't believe it. You don't accept it. That is why you are still blaming yourself, still blaming your trading strategy, blaming your broker after you lose a trade. Like I said, you must really just fully accept and embrace this, right? Embrace that, okay, if today you enter for a trade and you lose that trade, guess what? It's because the market did not happen the way you want it to happen. And it's okay. Because you know that your edge will eventually play out over the law of large numbers, and you will eventually win over a large amount of trades, over a series of trades, not based on this particular trade alone. And truth number 4 is an edge is just a higher probability of one thing happening over another. So once again, just a quick recap on edge. What is an edge? An edge is basically your trading strategy, your trading methodology, your risk management, right? And also your psychology, everything just combined together. And once again, your edge does not guarantee that you will win a trade. It just improves your odds. It increases the possibility of you winning the trade, but it never ever guarantees it whatsoever. So why the hell do you still think that you are going to win the next trade just because you have an 80% win rate trading strategy? If the market is offering you an edge, determine the risk and take the trade. If you lose, eat the loss and move on to the next trade. If you win, great. Pat yourself on the back and move on to the next trading opportunity. Trust your analysis and be confident in your trading abilities. Don't interfere with your trades without just cause. There's so many of you who keep on making this mistake, where after you enter for a trade, you start micromanaging it. You start moving your take profit nearer than where it originally is. You start making your stop loss further away because you see the trade going against you. No, once you place your stop loss, you know that that's the price point that invalidate your trade setup, invalidate your trade idea. Which means if price hit that stop loss, your trade idea is wrong. Then you are able to get out with a small loss. But if you keep on moving your stop loss because you are afraid to be wrong, you don't trust your trading abilities, then you are always going to take big losses. Because your risk is not consistent. You're always risking a lot of money since you keep on making your stop loss wide. Same thing if you take profit. And over the long term, if you keep on micromanaging a trade, moving your stop loss, take profit here and there on every single trade idea, what happens is that over the long run, you will have big losses and small wins. So if you want to become consistently profitable, place your stop loss, place your take profit, trust your analysis. Don't interfere with it whatsoever. And remember that every single trade outcome is irrelevant. Trust that your edge will play out in the long term over the law of large numbers. Right, like I said, if this trade, you lose it, doesn't matter. You win it, doesn't matter whatsoever. It does not define how good or how bad you are at trading. It certainly does not define how profitable or how unprofitable your trading strategy is. It's irrelevant. And the fifth truth is every movement in the market is unique. Every single price action or trade setup is never exactly the same. What I mean is that, let's say today you are a retail trader and you like to trade double top chart pattern. Okay, so you see a double top, you enter for a sell, right? Okay, here's the truth. Last week, you entered for, you saw a double top on the charts and then you enter for a sell and you make a profit. And today, you go onto the charts and you see a same pattern. You see a double top chart pattern which look very similar to the one last week that you won the trade on. So you decide to enter for a sell with a lot of conviction, knowing that since you won the last trade with this same pattern, you're going to win this trade as well. No. Next thing you know, price start reversing against you, the double top failed to do its job, and right now, price just hit your stop loss and stopped you out. That's what I mean. Just because the same entry model has made you a profit last time does not necessarily mean that it's going to make you profit again this time. And you need to accept and embrace that fact. Like I said just now, we know that our edge, our entry model will play out over the law of large numbers. But that doesn't guarantee that we will win this next trade that have the same entry model as the last trade that we won. When you truly believe this, you will experience a state of mind that is free of fear, stress, and anxiety when you trade. Don't associate the present trade with the ones in the past, since every trade is unique in the market. Sure, patterns do repeat themselves over and over again in the market. Right, you might see this entry model last time, or the last few years, and it might repeat themselves again over the next few years, or over the next decade or so. But it's never ever going to be 100% the same. There is always going to be some sort of changes, a little bit different. And all we can do as traders is to execute our edge to the best of our abilities and keep our actions consistent. Because at the end of the day, that's all we can control. We cannot control what the market will do. We cannot control how much money we will make on each trade. We cannot control whether we are going to win or lose the next trade. However, what we can control is ourselves, our actions, whether we actually follow our plan, whether we actually click the buy or sell button when our trading opportunity presents itself in the market, whether we actually do our job well, whether we actually do the right things. These are things that are within your realm of control. So if you try to predict the outcome of price, you are essentially trying to control the market, which is something that is unpredictable. And guess what? You will only get disappointed. So why bother trying to predict the market or control it in the first place? What separates the best traders from all the rest is that they have trained their minds to believe that every movement in the market is unique. And the stronger you believe in this, the less you will be attached to the outcome of the trade and the more open your mind will be to what the market is actually showing you. But if you continue to be stubborn in your ways, if you continue to think that the market is going to obey you, or the market is going to go in the way that you want it to go, you will always get disappointed and the market will always humble you. So these are really the 5 fundamental truths of trading that, like I said, you cannot just know them. You cannot just memorize them even. You must believe them. Because we talk about this in the Self-Transcendence course module. Your paradigm creates your belief, and your belief dictate your actions, and your actions dictate your reality. So if you still don't believe in any of them, you will still continue to lose. And when you do lose money and you fail to make money consistently, it's most likely because that you have a messed up trading psychology. And why is that so? Because you don't understand. You don't accept these 5 fundamental truths. You don't embrace them. So please, with every ounce of your human being, with every muscle fiber, with every brain cell that you have, accept and embrace these 5 fundamental truths. Anything can happen. You don't need to know what's going to happen next in order to make money. There is a random distribution between wins and losses for any given set of variables that define an edge. An edge is just a higher probability of one thing happening over another, and every movement in the market is unique. When you can truly accept these 5 fundamental truths and believe in them with all your heart and soul and mind and body, that's when you will be able to develop a probabilistic mindset, which is crucial for trading success. Then you can start seeing the market for what it actually is, not what you think it is, and transcend into an outlier, part of the 1% club, the top 1% trader that's able to smile through the losses and self-doubts because he knows exactly what the market is, an irrational, unpredictable beast. And he knows that consistent actions leads to consistent results, and the only thing he can control is himself, his trading strategy, and his mindset. Winning traders have both a technical edge and a mental edge. They don't just rely on strategy, they build discipline, confidence, and emotional control. So ask yourself this: are you just chasing strategies, or are you actually working on your mindset? Because the traders who master both, they are the ones who make it. If you're serious about taking your trading to the next level, join the 1% Club, my private coaching program, where me and my team of professional trading coaches will help you develop both your technical and mental edge. Inside the 1% Club, we don't just focus on strategies. We build traders who can actually execute under pressure, think like professionals, and control their emotions in real-time market conditions. Which is why you will get access to over 300 plus high-quality video training, my personal trading playbook, and daily coaching calls with traders like myself and Jason, who both have made over 6 figures from trading, and also a trading psychology coach called Sanjeev, who has helped thousands of traders to master their mindset. We are proud to say that we are one of the only programs out there that actually guarantee results. And the reason we can do that is simple. We've built a system so effective, there's nothing else like it in the industry. So, if you wish to become a consistently profitable 6-figure trader in the next 12 months, click the link below to apply, and if you're a good fit, we will get you there. Guaranteed.